for another video, our nonprofit fundamentals video series. Today we want to talk more about uniform guidance. So in our last session we talked a little bit about the 12 requirements, the 12 basic compliance requirements of uniform guidance. So when a nonprofit gets a government grant, you have to be in compliance with those requirements regardless of how large, what dollar amount you're getting for your government grant. So you have to review those compliance requirements and make sure that you are following those and designing your controls and procedures accordingly. But at what point does it trigger an audit from a CPA? So we can do different levels of an audit, but when we come in to do a uniform guidance audit, when does that get triggered? So basically, management has to prepare what's called a SEFA. It's a schedule of expenditures of federal awards. And basically, there is a prescribed format that you have to have certain columns, and you have to have an expenditure column. So it's not based off advances from your grants. It's based on how much you've spent. So a lot of the grants are cost reimbursement in nature. And so you have to have the right financial reporting to be able to show the expenditures on that SEFA. And when you have one grant or two grants or three grants, you add them all up on this SEFA. And when you're over a certain threshold, which is now $1 million,
I was waiting for you to say that amount.
that is what triggers a uniform guidance audit now. And what used to be the threshold?
So previously, the threshold was $750,000. It was that threshold for several years, beginning for, we'll say for the most part, for fiscal year 6/30/26, we'll say, you'll be up to the $1 million for expenditures. So that definitely does help, because if you don't get a uniform guidance audit, I'm sure you're very excited and happy.
Mm-hmm. Yep. So if you find yourself over that $1 million mark and you now have to have a uniform guidance audit, we wanted to give you a little bit of insight as to what that means. So, Adam?
Thank you. So the way I try to think about it is, you have your typical standard audit where you have your statement of financial position, statement of activities, and so on, your whole financial statement. And a typical financial statement audit is auditing those numbers, making sure there are no material misstatements in those financial statements. For a uniform guidance audit, we're now instead auditing that SEFA, that schedule that lists out your various grants and the grant expenditures. Unlike the regular financial statement audit, where we're auditing, make sure numbers and balances are correct. For uniform guidance, what we're really doing is making sure you're really complying with the grants that are listed there based on those 12 compliance requirements.
Mm-hmm.
So that's kind of the difference there. One's numbers based and one's compliance based.
Mm-hmm.
So how does this process work? So as auditors, we get your SEFA, and as management, that is something that you have to prepare. And what we do is we're looking to see how many programs that we need to test, how many grant programs. So we are not required to test every single grant that's on that SEFA. So if you have 100 grants listed on your SEFA, we're not required to test all of them. Uniform guidance has certain guidelines that we have to follow that tells us how much we have to look at, how many different programs. So where we start off is we need to determine if the auditee is considered low risk or not low risk, high risk. And there's like everything in uniform guidance, there's certain guidelines that we have to follow. Those guidelines are looking at, has your data collection form been filed the past couple of years? Are there any material weaknesses in your control environment or major compliance issues in the past? So we're looking at prior history to determine if you're currently a low-risk auditee or not. Now, based on that, if you're a low-risk auditee, that means we don't need to test as much. And if you're not a low-risk auditee, we have to test more. So what we do is we look at your SEFA, the total expenditures. If you're a low-risk auditee, we need to select a number of programs that equals or exceeds 20% of your total expenditures. And if you're not low risk, it's 40%. Won't get into all the specifics on the different types of programs. There's different names, types A, types B. April's nodding because she knows. But that's kind of our mindset. Is finding enough programs to meet those thresholds, and then we're auditing just those grant programs and not more than that.
Mhm. Think of it as a risk-based approach. A regular financial statement audit is always a risk-based approach. We want to see where there's more complex areas, high volumes of transactions, and that's where we focus our audits, just on a general audit. But when it comes to the CFA, same thing. We look at whether you're a low-risk auditee, and it's also a risk-based approach. So if there's been some compliance issues in the past, that then leads us to having to test more programs to get that higher percentage of coverage, like Adam said.
Yep.
Mm-hmm. So once we've selected our major programs, maybe we have just one or two, maybe we have more than that, we then need to get an in-depth understanding of the compliance requirements specific for that program. And it may not be all of those 12 compliance requirements. We also may not pick all of them to be the largest compliance requirements. So that's also where we look to test. We want to pick the biggest, most important compliance requirements. And then we also want to understand your controls to make sure that you're in compliance. So the uniform guidance audit is very heavily focused on the compliance piece, but also the controls. And then we design tests and we pick samples to look at both of those. So we want to test your controls. We want to make sure that there's evidence of review and approval and signatures, and we want to make sure that your expenses are allowable and in accordance with the budget or the guidelines. So we're going to be able to test a number of different things like the allowable costs, and so therefore we're looking at the controls and the compliance.
Just to jump in there, so when we're saying controls, we're talking about controls over compliance. I know a lot of times when you think of auditors, you think of financial reporting controls or controls over your procedures on cash and revenue in the different cycles. But for uniform guidance audit, it is specifically the controls to ensure that you're complying with those grants.
The most common ones that we see are allowable costs. So if you have a cost reimbursement grant, we're going to get a good understanding of your controls and your procedures to make sure that costs are reviewed, that they're allowable and in accordance with the grant. Another key area is reporting. So if you are required to submit reports of your expenditures, we look closely at that report that's being submitted to make sure that it looks accurate, it agrees back to the books and records. And so those are just two of those 12 compliance requirements that we see being tested most often.
And under uniform guidance, there's different. I'll just go back to what I said earlier. There's different guidelines. There's different requirements that we have to go through when it comes to the number of selections for testing, things of that nature. As an auditee, a lot of stuff that we're asking for is stuff that we typically ask for on a financial statement audit. It could be invoices, things of that nature, payroll reports. From an auditee perspective, it's not that different, but just know that we are looking at it a little differently than we would on a regular financial statement audit.
You'll experience, I guess, a higher volume of testing transactions because you have this uniform guidance audit on top of your regular audit. And yes, like Adam said, it's testing payroll, it's testing your expenditures, testing the ROEs and the reports that are being submitted. Another key area is cash management. So if you do get advances on your grants, you are supposed to minimize the time when you draw down if you're drawing down in advance, or you draw down after you've incurred all the expenditures. So that's another key area that we tend to audit, along with areas like procurement and suspension and debarment. That's another one as well. If an auditor deems that to be a significant area and a significant compliance requirement, your auditor may be digging into that in more detail too.
That's a good point about procurement. So under uniform guidance, procurement policies are required. So what that means is you need to have written policies and procedures for what's your process when you're making purchases based on different dollar thresholds. So
yes,
definitely gotta remember that.
Yeah, so written policies for procurement and also written policies for cash management.
Yes.
Yeah, two key areas. So hopefully that gives you some more insight as to what your auditor is going to be doing if you find yourself needing a uniform guidance audit one year. Stay tuned. In our next session, we're going to cover some common findings and issues that we see as auditors going through our uniform guidance audits.